So, very good afternoon, everyone. And a very, very warm welcome to today's session where we're going to be talking about the roadmap to US CMA, that's Certified Management Accountant. I'm Varun Jain. I'm a CPA, CMA, an alumnus of Harvard Business School, and the lead instructor at Miles Education. And it's a pleasure for me to host this session for all of you today. So on this nice sunny Sunday afternoon, let's talk about how we could take our career to the very very next level with the US CMA. So let's talk about this, right? So this is the US Management Accounting qualification. Now we will talk about management accounting in further details as we get into the presentation. But management accountants are they are finance and accounting professionals who work inside of businesses. So as a management accountant, you're actually the CFO of a company, or you're working for the CFO team, and your job is to create value for the enterprise. Your job is to create value for the organization. And we will talk about how you achieve this objective of value creation and how the CMA exam, with its right mix of 12 competencies gets you ready for the profession. Now, the US CMA, of course, has global acceptance, global credibility. Of course, there are other management accounting qualifications in other parts of the world. Let's say in India, we have the Indian ICWAI, which is now called the Indian CMA. UK, you have the UK CMA. But typically, right, the US qualifications really stand out from all other global qualifications. And a couple of reasons, for that. Number one, of course, given that it's US and US is the finance and accounting hub for the world, a US qualification is well recognized by not just American companies, but companies from across the world who are associated with the US, who have raised capital, in the US. Now, that's the first reason, right? The US, that's reason number one. Reason number two, and very important, is how the qualification is structured. Now, when you look at, let's say, qualifications like CA or the Indian CWA or CMA, or UK ACCA, UK CMA, all these, very good qualifications. But the way these qualifications are structured is that you start studying for these qualifications after class 12, right? So you complete class 12, you start studying for CA. Or you complete class 12, you start studying for the Indian ICWAI or UK CMA or ACCA. And these qualifications have a lot of content on them, right? So if I talk about CA or CWA in India, about 20 exams across 3 levels. So a lot of content, but these qualifications tell candidates that they don't have to go to college or university. So after class 12, you start studying for, let's say CA, you start studying for CWA, you start studying for ACCA or CMA. So all these qualifications are something which you can start studying for after class 12. And you can be a qualified accountant, a qualified professional, even without going to college or university. So what I'm trying to tell you here is with all these qualifications, university degree is not required. You can become a qualified professional without going to college, without going to university, without any kind of university education. And the reason for that is these qualifications sort of have this premise that everything, let's say in India, everything that you would learn otherwise in a BCom is covered as part of the CA curriculum or is covered as part of the CWA curriculum. And that's why they say university education is not required. Just focus on the professional qualification. And as a matter of fact, right, once you become a chartered accountant, nobody would even come and ask you whether did you do your BCom, because it does not matter, right? So the structure for qualifications for India, for UK, for qualifications around the world is the professional qualification substitutes university education. So university degree is not required, and you can just focus on the professional qualification. So after class 12, chuck university, just focus on the professional qualification. And of course, that is where the qualification also becomes lengthy, because the professional qualification now has to cover what you would otherwise learn in a university degree. And that is why CA has 20 exams, or the Indian ICWAI has 20 exams, or UK CMA has about 16 exams. Now, when we look at the US qualifications, they are structured very differently. all US professional qualifications mandate a university degree. So in the US, you want to be a CPA or a CMA or a CFA or a FRM, any professional qualification that you look at from the US, university degree is mandatory. So you have to be a university bachelor's. Now, on top of a university degree, the professional qualification has a few exams. So let's say if I talk about CPA, it says graduation is must. On top of graduation, 4 more exams. So the 4 exams basically complement university education to get you ready for the profession. They don't teach you everything, but they complement what you've already learned as part of a university degree. Likewise, for CMA, and we're going to talk about that today. You're going to have university degree must, and on top of university degree, only 2 more exams. So you don't have 20 exams for CMA. No, only 2 exams, because these 2 exams complement university education. So university degree is must. On top of university graduation, 2 more. Think about it, right? If you talk from an India perspective, let's say if I talk about a BCom today, BCom today is about 6 semesters, and each of the semesters have about 6 exams. So you're talking about 36 exams for BCom. So what we're saying here is those 36 exams are must. On top of the 36, 2 more for CMA. So these 2 exams complement your entire university education. So they don't teach you everything all over again, but they make sure that they get you up, let's say a fresh university graduate or a working professional, they get you ready for the profession. And within these 2 exams, we will talk about 12 core practice areas or 12 key competencies that you need to know to become a business finance professional, to become a management accountant. So the agenda here is to give you an entire roadmap, everything you need to know about CMA, and make sure you sort it. So we'll of course talk about Miles. We are IMA's global platinum partner, right? And we are number 1, India's number 1 CMA review. Majority of the CMAs in India are Miles alumni. So they've all studied from Miles, graduated. So we've been doing the CMA qualifications for the last 7 years. And we are tied up with over 120 companies, predominantly multinational companies who train their professionals for CMA or who recruit CMAs from Miles. This is something, and I'm going to talk about this in detail through my session. But on the US CMA exam, so the US CMA is offered by IMA, the Institute of Management Accountants, US. And IMA has 2 categories of memberships, right? So there's one category of professional members, where let us say you've already cleared you've done your graduation, you're working. You could be working in a multinational company, in a startup, in an Indian company, and alongside your full-time job, you appear for the 2 CMA exams. So you are a professional member with the IMA. You pass the CMA exams, and you earn your CMA. Very interestingly, IMA also has another category, a separate category of members, namely student members, where you can be an IMA member even before you graduate. So you can be an IMA member, appear for both the CMA exams, pass the exams even before you graduate. So I'm going to talk about the Miles relationships with over 70 plus universities and autonomous colleges across India, where we've integrated the CMA curriculum as part of university. So even as a student, you can clear the 2 CMA exams. When you clear the exams, you will get your mark sheets. However, you will not get the CMA degree until you graduate and have 2 years of experience. But the point is, you can clear your 2 CMA exams in, let's say, first year or second year of college, so that in the final year, when you go in for placements, you go in as a CMA candidate, as a BCom graduate, who's done a bachelor's, who's also cleared the 2 CMA exams. And that is a lot of credibility. So the CMA qualification, this is open both for professionals as well as for students. Now, at 5 p.m., when I do the CPA session, I'll tell you, for CPA, you can't even appear for the CPA exams before you graduate. So CPA exams they don't have a category of student members and all that. You need to be a graduate even before you appear for the CPA exams. But CMA, the good thing is there is a separate category of student members which has been created by the IMA. So these are like early learners, the ambitious kids, who want to sort of knock off this globally recognized exams even before graduation or alongside graduation. Okay, so let's talk about the why of CMA. Why CMA? And guys, I think the why of CMA, is basically the why for any kind of higher education or professional qualification that you are looking out for. Think about it, right? So why would you do a professional qualification? Why would you do, let's say, a higher education like an MBA? Number one, of course, you're looking at skills, right? You're looking at industry relevant skills. And number two, you're looking at credibility, right? The moment you say you're a chartered accountant, the moment you say you're a CMA, the moment you say you're a CPA, there's a lot of credibility that you carry. So with the CMA, the credibility that you have will not just be limited to any geographical boundaries, but it will be across the world. You have IMA members in over 180 countries. Right? And I'm going to talk about the global presence of IMA and how the CMA acts as a global passport. So guys, the skills on the CMA that you learn, and I spoke about this, right? So on the CMA exam, you learn skills that you need, you learn competencies that you need as a CFO, as part of the CFO team, while you're working inside of business. And your job is, how do you create value for the business? And all these skills, all the credibility with only 2 exams. Yes, right? So only 2 exams, and you can clear the 2 CMA exams within the next 6 months, or even if you can go conservative, the next 9 to 12 months. So you can earn your CMA in 2021, right? And with the CMA, right, the moment you have the letters CMA after your name, you're going to be a global finance professional. You talk to anybody across the world. Let's say you're talking to a CFO who's based out of the US. You're talking to an investor from Europe. You're talking to a client who's based out of Japan. You're talking to a colleague who's based out of Australia or Singapore. The moment you say you're a CMA, immediately there is credibility, immediately there is connect. So again, a lot of value, a lot of recognition, a lot of opportunities that you'll have for yourself in India and around the world with the CMA after your name. Now, we already discussed about this, right? So why 2 exams on CMA, or why 4 exams on CPA? And look at the left, and I'm going to do this again so that everybody's on the same page, right? When you look at the US qualifications, they complement university education. That means you have to clear those 36 exams in BCom or BBA or whatever qualification or whatever bachelor's you've done, and 2 more for CMA. Therefore, these US qualifications are crisp in content. They focus only on the skill gaps. So think about it, right? So let us say, the industry requires all these skill sets. Now, your university is getting you ready until here. So you see the skill gap. The industry requires all this. College is getting you ready until here. The CMA qualifications focuses here. It focuses on the skill gap. It gets you from here until here, so that you are ready for the industry. You are ready for the profession. Okay, so and of course, the good thing is, the CMA qualification, it is designed to be pursued alongside a full-time job. So if you're on a full-time job, you can do CMA alongside that full-time job and scale up your career. Now, when you look at Indian or UK professional qualifications, they tend to substitute university education. So let's say, and we spoke about this, right? You can be a chartered accountant without a BCom. Now, of course, once you are a chartered accountant, BCom does not matter. But the challenge is the CA qualification is so lengthy, and it substitutes university education. It includes the entire BCom within those 20 exams. So the challenge here is, the Indian professional qualifications, the UK professional qualifications, you work on them while you are a student, right? You work on them in lieu of university education. And they're good. They're good. Of course, they're good, but they are very, very lengthy. They have too many exams, too many levels. Very, very competitive. I'm not saying the CMA or the CPA are not competitive. They are, but the good thing is the competition is the assessments is only for 2 exams for CMA or 4 for CPA. They're crisp, concise. They are basically exactly what you need to apply concepts to context. They're exactly what you need to get you ready for the industry. And let's talk about this, right? And I know this is a very crowded slide, but let's talk about the first, 2 words on this. If you look at the heading of the slide, it says CMA at FNA, that's Finance and Accounting Roles. The job of CMAs in 2 words is value creation. So CMAs work inside of companies, as I said, as a CFO, as part of CFO teams, and their job is to create value for the organization. CAs or CPAs, when they become auditors, they get the public accounting firms, and their job is to come in and audit the financials, express an opinion on the numbers. And let's talk about the role of CMAs. Now let's see. When we talk about value creation, the question is, how do you measure value or valuation of a company? And there are multiple ways of measuring a valuation or doing valuation for companies. One of that is, let's say, the PE ratio. It's a valuation multiple. PE stands for price by earnings. So let's do one by one, right? So when we talk about the numerator price, what price are we talking about here, right? And when we talk about earnings, we can talk about earnings per share. Right? Now, when we look at, let's say a company has a few million shares outstanding, right? And we aggregate the share prices of all those outstanding stock. That becomes the market cap of the company. Market cap or the market capitalization is nothing but the value of the company. And if you aggregate all the, earnings per share of all the shares, it becomes the net profit or net income of the company. So what we are saying in the P ratio is that the market cap of the company or the value of the company is a multiple of its earnings, a multiple of its profits. Now, when we look at P ratio, we have typically we have P ratios for various industries, and you look at sort of industry average. So let's talk about an industry where we have, let's say, a P ratio of 15x. So guys, when I tell you that the P ratio of an industry is 15x, what does it mean? Now, the stock price is 15 times the profit, right? Okay, so let's talk about this. So let's say there's a company where the profit of the company is $40 million. The net profit or the net earnings is $40 million. What is the valuation of the company? What is the market cap of the company? The P ratio is 15x and the net profit is $40 million. What is the valuation of this company? The valuation of the company, right? If the profit is $40 million and P ratio is 15x, the value will be 15 times. The value is going to be $600 million. Now, let us say, and let me use an orange pen now. Let's say you join this company as a CMA, as a management accountant. And let us say your job when you join this company is to make this company more profitable. Your job is to increase profits. And the target for you is to increase profits from, let's say, $40 million to $60 million. Let us say, you've joined this company where profit is $40 million, valuation right now is $600 million. And your job is to help increase profit from $40 million to $60 million. Is if you are able to increase profit from 40 to 60, what will be your new valuation, your new market cap? Okay, your new market cap is going to be $900 million. Yes, let's look at the delta here. How much profit did you increase? How much profit did you increase? So you went in there as a CMA. How much was the increase in profit? The delta here is $20 million. So you increase profit by $20 million from 40 to 60. By increasing profit by $20 million, how much value did you create? How much extra value did you create by increasing profit by $20 million? You created incremental value of $300 million. So guys, that is your job as a CMA. Your job as a CMA is value creation. Your job is how do you create value for the enterprise, for the organization. And look at this, by increasing profit only by $20 million, a small amount of increase in profit, you have created value of $300 million. So I hope everybody is able to understand the role of CMAs. So your job, the why of CMA, the why of management accounting is to talk about how you will create value for your enterprise. How you, by increasing profit by the small delta, only $20 million, are able to create, let's say in this example, a $300 million value. Your company was already $600 million worth. It was a company doing good. But you went in there and the value increased in 1 year from 600 to 900. Right? So on the CMA exams, you're going to learn how do you maximize profits. You're going to learn how do you maximize value. Rather, in reverse order, you're going to learn how do you maximize value. And one of the KPIs in maximize value is maximizing profits. Now, guys, there are a lot of companies, and especially when you look at the unicorns or the startup, a lot of companies which actually lose money, which are in losses, but they're still worth billions of dollars. How's that? Right? Let's say, the Amazons, the Ubers, the Paytms, the Olas of the world, they've become unicorns even though they didn't make any money. So guys, their story, think about it, right? And let me ask you a question. Would you invest in a company which is currently not making money, which is in losses, and which will never ever make money? Guys, will you invest in a company which is not making money today, which is fine, but which will never ever make money? In the next 500 years also, it will not make money. So the point is, right, a lot of these startups who are not making money today, their story to their investors is that their focus is on their customers. Their focus is they're trying to keep their customers happy. They're trying to build up a customer stickiness. They're trying to build up a customer loyalty. Think of Amazon, right? Think of Ola in India, or think of a Paytm. All their agenda is to build that customer base. Build that customer base who sticks to them, right? Who's going to be there with them. Even though they lose money today, with this, loyal customer base, their story to their investors is they will ultimately make a lot of money. And that is how they've become unicorns, right? So the agenda is, though these companies aren't making money today, their story is they will ultimately make money. So guys, when we talk about this, right, let's say on CMA, when we talk about performance management, and that's one of the 12 competencies, we will talk about, financial perspective. Financial perspective is how much money you made today. Now, there could be a company which is not making money today, but it is taking care of the customer perspective. It is keeping its customers happy. The company could be focusing on its internal business processes. The company could be focusing on making sure that they have, strong, good employees, competent employees. So think about it, right? If your company has good employees, if your company has robust business processes, will you be able to keep your customers happy? Of course. And if you keep your customers happy, you will ultimately make money. So Rajan has a question, right? The CMA's job is not to keep the customers happy. That is the customer experience team or the customer service team. That's fine. But as a CMA, you are setting up the strategy for the entire organization. You are the one who's allocating budgets for customer experience. You are the one who's allocating budget for that internal business process improvement. You are the one who's allocating budgets to build that employee base. So your job is to make sure that you build up the foundations of the organization in such a way that the organization will ultimately make money. Either it's making money today, so the example that I gave you is an organization which is making money today, or you build up an organization which will ultimately make money. So the financial perspective, right? The ROI, the net profit, and that is how you create valuation for a company, right? And that is how you create value, your job as CMA. So the four perspectives I told to you, we learned that in something called a balanced scorecard. So a balanced scorecard is where you take a holistic view of performance. Typically, when we talk about performance of a company, right, we look at the financial statements, we look at the profits. And I told you, right, profits is a very important metrics. But there could be companies which are not making money today, but which will ultimately make a lot of money. So you got to look at a holistic view of performance. But let us say, multiples like PE ratio, right, price by earnings ratio, they work on profits, right? If the company is not making money, the PE ratio will not work. So I give you an example of how you could get into a company which is already profitable, doing $40 million of profits every year, and you increase profits only by $20 million to create value of as much as $300 million. And that is, again, as I said, guys, your job as a CMA. So let's get back to this, right? Let me get back to my dashboard. Now, when the auditor comes in, so let's talk about the auditors, right? So let's say the CMA, you're working inside of the company, you're part of the management. Now, when the auditor comes in to audit, what does the auditor audit? Does he audit next year's financials or does he audit last year's financials? What does the auditor audit? So all of you seeing the auditor audits last year's numbers. So guys, when the auditor comes in for this company, let me use a green pen for the auditor, a green highlighter. The auditor is going to audit this, right? He's going to audit whether it's $40 million of profit is actually $40 million. What is the auditor's biggest worry? The auditor's biggest worry is, what if this company has made only $30 million, but they're reporting 40? Because think about it. If the company's profit is only 30, not 40, what will be the valuation of the company? If the company's profit is only $30 million, not 40, what will be the valuation? The valuation is going to be 450. So the auditor is worried. His concern is, are the numbers correct? The auditor's concern is, if the company is saying $40 million of profit, is that profit actually $40 million, or is the management trying to overstate? Right? And that is why the auditor audits the financials and expresses an opinion on those numbers. So guys, let's talk about it, right? So we said the auditor. So the auditor, guys, the auditors are public accountants. In India, to be an auditor, you have to be a chartered accountant. In the US or for global companies, you want to be an auditor, you have to be a CPA. So when the auditor is coming in, the auditor's focus is what happened last year. Are the last year's numbers correct? But as a CMA, as a management accountant, what is your focus? Your focus is what will happen next year. Your focus is, how do you convert that $40 million of profit to this $16 million? Your focus is, how do you create value? So let's talk about this, guys. How many of you drive a car or a bike? How many of you drive a car or a bike? And guys, I see most of you responding back to all panelists. Respond back to all panelists and attendees. Change that option on your chat. Right? So let us say you're driving your car or a bike. You're going from place A to place B. So let's say you could be in any city in the country, and you're driving from point A to point B. And let us say those 2 points are 1 hour apart. There's a 1 hour of drive that you have to do. Now, in that 1 hour of drive, of course, there are many turns, there are small roads, narrow roads as well, and you are driving through all those roads. Now, my question to you is, how many of you, before you start driving, you set up the rear view mirror? Or do you do it? How many of you, when you start driving your car or bike, do you set up that rear? Bike has a rear view mirror, the car has a rear view mirror. How many of you set? And guys, again, respond back to all panelists and attendees on the chat. Okay, so I see a lot of you saying that I do. I haven't seen anybody saying I don't do. Okay, great. So good. So all of you are very. Somebody said I never use mirror, but most of you are saying I do. So guys, the point is, before you start driving, you set up the rear view mirror. But now let's say you're driving for 60 minutes. Now, in a typical 60-minute drive in India, for how long do you look at the rear view mirror? And I need the cumulative time. Let's say every time you glance at the rear view mirror for 2 seconds or 3 seconds or 5 seconds, cumulatively in that 60-minute drive, how many minutes have you looked at the rear view mirror? In that 60-minute drive, for how many minutes cumulatively have you looked at the rear view mirror? So I see somebody saying 2 minutes, 3 minutes, 5 minutes, 10 minutes, right? So let's cumulative, right? 2 seconds each time into number of times it is, or 3 seconds each time into number of times. So let us say, you look at the rear view mirror. I see some people saying 1 minute, some people saying 5 minutes. Let me take an average. Let us say you're looking at the rear view mirror for 3 minutes in that 60-minute drive. So basically, what you're telling me is, you guys have looked at the rear view mirror for 5% of the time. The remaining 95% of the time, remaining 57 minutes, what are you doing? Where are you looking? So 3 minutes you're looking at the rear view mirror. 57 minutes, what are you doing? Where are you looking? You're looking in front, you're looking ahead, right? So guys, that is exactly your role as a CMA. You are in the driver's seat and your job is to drive your organization forward. Now, if you want to drive your organization forward, where do you have to look? Guys, if you want to drive forward, where do you have to look? Think about it. Let us say you spend the entire 60 minutes looking at the rear view mirror. Let us say you spend the entire 60 minutes looking at the rear view mirror. Can you drive forward? If you're only looking at the rear view mirror, you can only go in reverse gear. Right? So guys, understand the perspective here. As a CMA, rather on the CMA exams, what we teach you is how do you look forward, because your job is to drive forward. However, we will also teach you the rear view mirrors. We will also make sure you have the rear view mirrors, because 5% of the times you also have to look, everything is okay behind you. But 95% of the time you are looking forward because you are driving your organization forward. Now, typically when you look at auditors, you look at public accountants, you look at typical accountants, they are very good with what happened last year. They're very good with last year's balance sheet or last year's profit and loss account. Your job as a CMA is next year's balance sheet, next year's P&L. Your job is how do you drive your organization forward. I hope everybody got this, right? So the agenda here, and I'm going to talk about what all is taught on the CMA exams in detail, but I really want to set up a context here. I want you to understand, what does a management accountant really do? The job of a management accountant is to help drive the organization forward. I'm not saying that the management accountant is not responsible for what happened last year. There is the rear view mirror. You need to spend 5% or let's say 10% of your time looking at the rear view mirror to make sure everything is okay last year. But your job is next year, right? So when you look at, let's say, public accounting, auditors, Their job is last year. Their job is to make sure last year's numbers are correct. They focus their attention there. While you as a CMA focus on next year, you focus on value creation. Rather, a lot of CMAs, who study with us and who get placed, they join in, the finance function as part of FP&A teams. Guys, what does FP&A stand for? So CMAs typically join FP&A teams. So FP&A stands for financial planning and analysis, right? Again, as CMAs, the job is drive the organization forward. Again, CMAs work in multiple roles. I'm not saying FP&A is the only role, but FP&A is one of the favorite roles for CMAs. One of the favorite roles amongst many, many others. Again, the job is what's going to happen next year. How do we drive the organization forward? Of course, the CMAs then grow up the level to ultimately become the CFO of the organization, or oftentimes CMAs become CEOs of the organization because they know finance and they know business. They know how to create value of the business. So that is how the progression is up to a CFO and then to a CEO. So we spoke about looking forward. Now, when you want to take a decision, and guys, I'm going to come in a moment about what is there in the CMA exams, but let's look at this very interesting chart. Now, when you want to look forward, when you want to drive forward, right, you want to take business decisions. How do you want to take decisions? Do you want to take this on the basis of gut intuition, or do you want to take decisions basis data? What do you prefer? Do you want to take decisions how you feel? Like you feel that is right and you do that. Or you want to take decisions on the basis of data? I see everybody saying, okay, so guys, all of you are saying that you want to be folks. And I saw one of the responses. I saw one of the responses from Himanshu, and Himanshu says both gut feel and data. So Himanshu is correct, right? Gut feel is important. Intuition is important. But along with intuition, you need to back it up with data. Because if you work only on intuition, you may only be able to go so far, right? So it's more like when you're driving on the road and it is a new city. Would you drive where you feel is the road, or would you use Google Maps? So the point is, again, you want to make sure that you use the right data points. You take data-driven decisions. Gut is good. Intuition is good. I'm not saying gut is bad. Gut is great, right? Let's say your CEO intuitively feels that this product line should be expanded. Now, your question as a CMA would be, how do you do that? And you use data to drive that decision, right? When we talk about data, right? When you use data to drive decision making, let us say, look at the chart here, guys. Look at the bottom left of the chart. We say descriptive analytics. When we talk about descriptive analytics, we are talking about the past. What happened in the past? Let's say, last year we lost money on that product. Right? What will be your immediate next question? Last year we lost money on a product. What will be your immediate next question? Of course, your next question is going to be why. Right? Why did we lose the money? What's the reason? That is what we call diagnostics analytics. Right? Descriptive analytics is what happened in the past. Diagnostics analytics is why did it happen. So this is again, we're talking about the past. We're talking about the rear view mirror. We're talking about the hindsight, very important. But guys, increasingly, your job as a CMA, your job as a management accountant, your job as a finance professional in business is to look forward. Your job is to talk about what will happen. And we call that predictive analytics. So you are supposed to be predicting the future. You are supposed to be predicting the future course for your organization. And most importantly, you're supposed to be talking about how can we make it happen, or prescriptive analytics. I hope everybody's with me on this, right? So hindsight, that's descriptive analytics or diagnostic analytics, to insight, predictive analytics, to foresight, which is again prescriptive analytics. So look at the progression, guys. Information to look at the blue line. Information to optimization. hindsight to insight to foresight. Now, let me ask you a question. What is more valuable to a company? Predictive analytics or descriptive analytics? What is more valuable amongst the two? What is more valuable? Of course, predictive analytics, right? Because you have to drive the organization forward. What happened is fine, that is bygone. Your job is to drive forward. What is more valuable is predictive analytics. And that is why you look at the y-axis. On the y-axis, you see value. So as you move up the chain here, predictive analytics is more valuable than descriptive analytics. Okay, what is more difficult? Predictive analytics or descriptive analytics? What is more difficult to do? Analyzing the past or analyzing the future? What is more difficult? And that is why guys look at the x-axis, right? So the point is when you look at predictive analytics, of course you're talking about future, which is uncertain, and that is why it is more difficult. So with this, guys, what I'm trying to sort of get to you is the analytics ascendancy model and how you, as a CMA, you're going to be learning how do you predict the future? How do you talk about what will happen? How will you talk about how can we make it happen? How will you use predictive analytics and prescriptive analytics to drive your organization forward? Now, let us say, for data analytics, you use a lot of tools. Of course, the CMA exams is not focused on tools, but there are a lot of tools for data analysis, a lot of data sets that you use. Let us say when you're talking about a product which is not doing so well, and you want to predict what is going to happen, you will look at a lot of data sets. One data set that you will look at is what is the past performance of the product. You may want to look at other data sets in terms of what is the customer feedback on the product. You may look at all the customer escalations that you have received on your customer service help desk. You may want to look at the kind of feedback customers are posting about your company on social media. Let's say on Facebook or on Instagram or on Twitter. How are customers responding about your product? And guys, all these data sets will help you understand where is the gap. And with all that understanding, you will be able to make things better. You will be able to understand, okay, hey, if we want to increase sales next year, what do we do? Should we, expand the product line? Should we target a new geography? Should we target a new customer segment? And guys, you as a CMA, you're going to be all set, all equipped to take data-driven decisions.